Hello, everybody, and welcome to the Crypto Hipsters Chronicles. This is your host, Jamil Hassan, the Crypto Hipster, where from the period of time of March 2021 through June 2022, I interviewed 182 founders, executives, entrepreneurs, artists, and authors from over 50 different countries and built a global audience in 165 countries while posting and producing my podcast at the Irish Tech News platform. Since then, I realized there's a lot of incredible content in the interviews that I had, and my interviews with Thought Leadership podcast interviews that had amazing gems from all the guests that I was able to interview. And so I've chosen and decided to create the Crypto Hipsters Chronicles series, which is a series of the gems, the little tiny pieces from each of the interviews that I had in the areas of Bitcoin, Ethereum, metaverses, NFTs, regulatory issues in crypto globally, art, and you name it across the wide spectrum of different verticals in blockchain and crypto industry, and in fintech and mobility and sustainability as well. These are about 15 minutes long, each chronicle, and has 3, 4, or 5 different segments from different interviews. So I hope you enjoy them. I hope you have learned a lot. And if you'd like to listen to the full podcasts, they are available online at both the Irish Tech News and on Anchor. And in a future date will be available on the Crypto Hipsters station as well. So please enjoy and talk to you soon. Hello, everybody. Welcome to Crypto Hipsters Chronicles, episode 41. Crypto across the four corners. Blockchain and Bitcoin insights from around the world. This Chronicles episode is a compilation of 4 interviews. The first was with Michael Creedon, who is the president of DeFi devs at Accumulate. He is also an advisor at Invenium. Second, Walid Abu Zaki, who is the founder and CEO of Unlock Blockchain in Dubai. Third is Charles Dahossi, who is the managing director of the APAC region in Hong Kong of Consensus. And fourth is Li Jun, who is the founder of Ontology. Welcome and enjoy. Private markets, a lot of them you would think are siloed. So when I'm on Twitter talking about posting about crypto, a lot of people on crypto are only looking at the crypto market. And the fact is that a lot of these markets are intertwined, interwoven. What happens in the bond market or equity market will impact the crypto market. So I wanted to ask you, you said you traded bonds and commodities in private markets for 20 years. So you have a unique perspective, probably one of the most unique perspectives I've seen on the fixed income markets and also on the Federal Reserve's view on global markets. How do you see the global bond market behavior trending in 2021? And how will this market environment impact crypto?
Wow, it's a great question. I would, again, let's start with the bond market first. I mean, let me just tell you that after Lehman Brothers, which I know you were very active, I'd love to hear you talk about your involvement with where you were working back then. I believe it was AIG. But after Lehman Brothers and that shock in 2008 and the recovery of 2009, the Fed pinned down rates at zero, what was known as ZIRP, zero interest rate policy. Well, we didn't know it would be forever. But, in 2010, 2011, 2012, as a bond trader, you're sitting there saying, when is the action going to start? When are interest rates going to start to move again and float? And the reality is it never happened, more or less. And because the Fed just was committed to low interest rates, because they were committed to job growth, and they just are messianic about it. We got to get the unemployment rate down, and until we do, and because inflation is not an issue, we're just going to put the pedal to the metal and keep rates low. And that carried on all the way till coronavirus popped up. And then there was an acceleration even further downward in rates. So the point is, the Fed is very, very patient. The Fed is extremely committed to their goals. And in that context, I don't think the Fed's going to get shaken out of this anytime soon, even if the growth numbers go up. But you have to remember about the bond market that there's players that need yield. It may not be me and they may not be you, but the largest insurance companies in the world, they need a fixed income on their balance sheet. And so when you look around the world for global yield, if you look at Europe, they still have trillions of dollars, I believe, in negative interest rates, trillions. So nobody's going to want to buy the German 10-year at negative 30 basis points when they can have the 10-year in the US at 170 basis points. So anyway, the point is, there will be demand for US bonds. I don't know if that means at 170, 220, 240, but it's not going to be 5%. So again, every time you get an uptick in the economy since Lehman, people start talking about 5% 10-year yields and hyperinflation. And so far, that's yet to pan out. That's yet to happen. I'm not saying it can never happen, but I'm just saying if you look back at the data, even since the 70s, we've just never seen a spike in hyperinflation in 40 years in this country. Doesn't mean it'll never happen. But what I'm saying is, I think that the 10-year yield in the bond market can find some equilibrium in and around here, stabilize, and then So I mean, if I had to flip a coin, I would say at the end of this year, rates will be lower in this country than higher. But again, shoot me if I'm wrong, but I've seen this movie for 12 years now, and every spring people are talking about higher rates, and at the end of the year, it goes the other way. So I've said enough on that. In terms of the crypto markets, my view is certainly counter to a lot of people's. I just continue to think Bitcoin is a currency. Other people disagree. Other people that know a lot more about it than I do. They talk about the blockchain and all these other things, and that's great. But I see it as a currency, and I think it's becoming a mid-tier currency is how I describe it. The way I look at it is we had a shock, which is coronavirus. The Fed flooded the markets with liquidity, drove down interest rates to, not rational. I shouldn't say not rational, but to very low levels, and they did it for a reason. But now as the economy is coming back online, coronavirus numbers are going down, interest rates are going up. And, but as to where they're going to end at the end of the year, I'm not that worried about it, to be honest with you. I traded fixed income for 20 years. And after Lehman Brothers, people thought rates would spike, once Lehman was kind of over. And quite frankly, they never did. And they never rose dramatically because the Fed stayed committed to easy money policies. And they introduced things like quantitative easing, and they bought back bonds. And the Fed is absolutely messianic. There's no other word for it, about keeping interest rates low. They want interest rates low to create jobs, so long as inflation is not a problem in their eyes. And if that's the formula, the Fed has two mandates: keep inflation low and create jobs. And until there's a problem with inflation in the Fed's view, and until they have, a perfect employment situation, they're going to keep rates low.
I found a lot of information. As you said, the media is kind of choppy a little bit, but I found some good information. Especially, let's walk around the Middle East a little bit, and talk about Dubai for now. The Dubai Financial Services Authority. I found this on Unlock Blockchain. The Dubai Financial Services Authority has recently made an announcement that it will be focusing on security tokens first before delving into cryptocurrencies, stablecoins, or utility tokens. That seems to me to be the exact opposite of every other country in the world. So why is Dubai taking that approach?
So as I said earlier, Dubai was the first destination for us to organize Unlock Blockchain Forum, because Dubai was the first government moving into this space. So leaders in Dubai saw an opportunity to create something new instead of acquiring existing solution. With this mentality, I'm sure that the FSA decision to start by security token in their consultation document fall under the same. So they do what is needed and what they can sell at the end of the day. And it was clearly mentioned in their document that they have received a lot of requests to try to regulate this space. So they delivered this first, and sure, things to come. Regulators in Dubai are pragmatic. They are accessible. They have been showing this for the last 25 years, and I'm sure nothing will change in the blockchain and the crypto space. But always we have to keep in mind that Dubai is a city or is a state inside a big United Arab Emirates. And if we zoom out a little bit and look into the big picture, so the Security and Commodities Authority issued on November 2020, maybe one of the best framework of digital assets on digital assets. So, and lately they signed with DMCC, another free zone. They signed an MOU allowing DMCC to start issuing onshore crypto license. So with ESCA as a federal authority, with two financial centers where the IFC in Dubai, Abu Dhabi Global Market, and Abu Dhabi, while Abu Dhabi Global Market, they issued a full-fledged crypto framework as a financial district. So we have to keep in mind that UAE is a federal government. Dubai is part of the UAE, and I believe the monetary policy always will stay with the federal government and not with Dubai alone or Abu Dhabi alone. So I believe UAE, Dubai, they are on the right track. I don't expect 100 exchange to open up in Dubai between today and tomorrow. Things need time. Regulator needs to be convinced by the projects, who's behind it, and the innovation behind it. And they care more about the innovation coming with the project, not just to create a crypto trading platform. Meanwhile, if you go around Dubai, you can meet in every corner someone from the crypto community. They are everywhere. There are many. There's many crypto holders, crypto fund even. Many of them invested in different ICOs at the beginning. And lately, last week, we witnessed one of the first decentralized finance platform from UAE, which is a sign that things are moving forward. It's all about what is the project, who's behind it, what this project may bring a value for the UAE itself.
What's being built? What are you seeing specifically as far as industry building, as far as what's taken off there?
So Hong Kong and blockchain is a long story. If you look back at the first time the government of Hong Kong started to mention blockchain and crypto, it was back in 2014. 2016, the HKMA, the central bank of Hong Kong, started to work on CBDCs and blockchain itself. And there is, like in many places in the world, kind of a line being drawn between cryptocurrencies and blockchain as a technology. And Hong Kong is definitely, as many places in Asia, full on blockchain technology. You see that from the government perspective, starting to build a platform to connect different departments of the Hong Kong government and exchanging information much more effectively. You see the HKMA working on central bank digital currencies very actively. Consensus is building the M bridge, the multiple CBDC bridge, building a platform where 4 central banks are meeting each other and creating a cross-border CBDC platform to enable and support cross-border trade and business in general. In the crypto side itself, I think regulations is coming also in Hong Kong, as it's coming in the US and Europe, and there is more rules coming up. But the chance of Hong Kong was that we started with a very limited number of rules, so it created from the get-go a very vivid and rich environment. So now regulations are coming. We see some companies starting to kind of revamp their product offering with the Hong Kong customers. But it's doing very well. Clearly, the NFT is doing well here in Hong Kong, and all the institutional upgrade of infrastructure is happening, from central banks to commercial banks and investment bank. We see very large players here building large teams, up to 100 people full time on digital assets, and thinking how they can work on bond issuance, how they can start new business line around carbon credits. The governance here is also a big topic, which will be enabled by blockchain. So there is mitigate signals coming, but I can tell you, being on the ground here, that overall it's extremely energized and super active ecosystem on blockchain.
Great. So you mentioned CBDC, right? Which is the China currency. And immediate thoughts are, China banned Bitcoin again. And they want to roll out their centralized currency. But you have, mentioned cross-border. You have relationships over there with China, with Taiwan, with Hong Kong, with all the countries. How do you see that CBDC actually playing out if it's not from an isolationist perspective?
That's a very important question. De facto today, you've got 2 different renminbis. Renminbi being the currency of China. So technically, as a banker, you will call CNH and CNY. So CNY is a renminbi which is living domestically inside China, and there is also what we call an offshore renminbi. So you have de facto 2 renminbis, and this is it's a fact for many years now. So we've seen China getting clearly a head start on every single countries in the world on CBDCs, looking at how they can essentially empower their economy, making sure there is a fair play within the payment industries. You might be aware that Alipay and WeChat clearly dominate the payment industry today, and possibly it was one of the numerous reasons why the CBDC came in, also to kind of come back to a more plain level field for everyone in the payment industry. But that's happening in China. So China has a very interesting approach to CBDCs. They started with a retail use case. They started with CBDCs for you and me and every single users, whereas we in the West have been starting mostly around wholesale CBDC. So the CBDC between the central banks and the commercial banks. So it's yet to be seen how the renminbi, the international CBDC of the renminbi, will be designed and how it will work. I think it's still in the play, and probably there is a time gap which will be filled by other currencies, leading currencies globally, and seeing how they will eventually go for the internalization of their currency as CBDCs. So it's yet to be seen. But what is for sure is that as per today, 2021, China digital renminbi, which is called eCNY, is clearly very, very close to be fully launched. And my prediction for 2022 is that the volume of CBDC transaction in China will surpass the volume of stablecoin in US dollar in the whole crypto industry. So it's already a big business. About 89 billion US dollar are already tokenized on the blockchain today. But my prediction is that the volume of transaction on CBDC will be catching up in no time, as soon as China deploy fully their CBDC in production in their domestic market.
What you said there, you said build business again, and that's what we need to do. So moving on to the next one, you said without approval from the SEC, crypto-hungry investors enter the market at their own risk. I think we saw that over this weekend. SEC endorsement of a Bitcoin ETF would see the doors of digital finance open for millions of new users, as well as the freeing up of access to millions of dollars. So my first question there is, why are you looking at America and the SEC to lead the way instead of your home country, China? As there are, number one, there are far more people in China. There are some major cities with tons of wealth and individual economies in each of those cities.
Yeah, I think so. Up to now, I believe there's also competition between different regulators in different countries. To be honest, American already, especially in today, already is a leader for those kind of competition. Especially you can see Coinbase be listed, and a lot of company and new startup in crypto industry actually is from the United States. And also investor also can invest the crypto assets in legal process, under the legal process. So I believe SEC will have more and more regulation for crypto world or digital assets world will coming. And finally, you will find United States, maybe they can have a regulation controller globally in crypto world, because they can actually become the standard for those kind of regulation. They also will be the pricing center for the crypto assets, especially in China or other countries. The regulation is still not friendly in most cases, especially for exchange, for trading. And so I think American is leader. But to be another side, for holding the digital assets, both legal in China, in America, in many countries, and for the application for decentralized service, the based on the blockchain infrastructure also is legal, can support that. So for the final destination, I mean the competition to the final destination, they still depend on how large scope, I mean business scope, how many use cases or scenarios you have. From this point of view, I still believe China and the United States have good chance to become two of popular, the hottest countries for blockchain adoption. Europe also have a chance. The chance is coming from they have a strong enough the data regulation process compared with other countries. So, but if you want to implement it, those kind of legal process in practice, currently blockchain almost is only one choice. I mean the technical choice for those kind of new data regulation. The centralized database or centralized internet platform cannot support that. So that means a lot of innovation, like the Web3 innovation, decentralized identity or data, they have a lot of chance to be innovative new models in practice in Europe. So I still very exciting for those kind of trend. I still believe they will have a lot of good opportunities for decentralized, no matter investment, also the real business or application adoption.